Welcome back to the program. Tonight, entrepreneurs across Africa are calling on governments and private entities to channel resources and skills into enhancing small and medium-sized enterprises to grow. The issue of access to finance and markets came up during a discussion on understanding and addressing the needs of Ghana and Sierra Leone-based businesses. Richard Yawa is Managing Director for MDF West Africa and regional training and consultancy provider.
I should say that we should recommend the government because at the end of it, they are the funding partners of the Ghana Innovation Hub and the Ghana Tech Lab. So the way forward is that I think that private companies should also come in because it's also about a whole ecosystem and the whole value chain. Big companies will need a good SME sector here to also supply them. Otherwise, they will have to go outside the country to import all those expertise. So they should help hubs like us to be able to support these small and medium-sized enterprises so that they can meet their demands that they have.
Who believes a lot more has to be done in ensuring small businesses thrive.
We have to make that narrative that is that Africa Rising narrative. We've got to make that translate into something that all Africans can eat. So there are challenges. There are challenges on every level that you can think about. But it's also quite exciting. For me, the biggest challenge and the only one that kind of really springs to mind is skills. It's skills. It's personnel. It's that knowledge transfer, making sure your staff know what to do to buy into the vision to create value. That's really the biggest challenge for me. And also financing. That's always one that affects most small businesses is how do we get access to finance? And I think there's still quite a lot of work to be done to declutter these standard models. They've now become the norm. There's all these different hubs and things going on, and they're not necessarily doing the job.
All right, let's turn to other news tonight. GCB Bank has recorded positive growth for 2018-2019 financial year, having suffered some losses from the takeover of UT and Capital Banks. The development compelled the bank to seek some 400 million cedi support from the central bank. Here's Ebenezer Sabote's report.
After the takeover of UT and Capital Bank, GCB Bank began an integration process which led to the closure of more than 20 branches of both banks. According to the Deputy MD of GCB Bank, Socrates Afram, this affected performance of the bank, leading to some loss of 1 billion cedis out of a total of about 2.3 billion cedis deposits it took over from the two banks. Taking turns at the facts behind the figure series at the Ghana Stock Exchange, Socrates Afram said the bank has recorded some pickup in deposits and revenue.
Prior to the assumption, we had substantial amount of interbank investments. And so as a bank, because of these heavy withdrawals, we had to even liquidate all our investments in that space, to the point that it got to a stage we needed to even go to the central bank to tell them we are bleeding too much from this process, so we need support. We took 400 million from the central bank at commercial rates for that purpose as well. And so the 2.3 we met, we lost about 1 billion up to December 2017. Subsequently, we've been able to get some money back. We've been able to tap into business of some of the customers that hitherto we didn't have, especially in the area of trade.
Meanwhile, Managing Director of GCB, Ray Sowa, disclosed that the bank is in talks with a private firm to venture into the insurance market.
Insurance penetration in this country is very low. It's not even in double figures. So it presents a real opportunity for an aggressive player to get into the space and do new things. We are looking at things like agric insurance and so on and so forth. That is how India has grown. So you want to take advantage of some of those things and also create an opportunity for people to invest monies in a different way. It shouldn't always be savings and loans, banks, and so on and so forth. People need to be able to invest in insurance, in pensions, and whatever.
The bank is also converting one of its subsidiaries into an investment company, which will help to expand its presence.
All right, away from GCB Bank, let's talk about Standard Bank because it has launched an Africa-China agent proposition which aims at assisting African importers to source and validate goods from suppliers in China. The head of Africa-China integration at Standard Bank, Dr. Manasseh Alagboso, says this will put Ghana on a stronger negotiation position in terms of cost of importing from China. He said this at the launch of the initiative in Accra. He joins me in studio with more of that. Thanks for your time tonight. Hope I didn't destroy the surname, but it's good to have you tonight. So tell me a bit more about this Africa-China agent proposition.
So the Africa-China agent proposition, we called it agent proposition because there's an agent involved. Actually, it's aimed at customers who import from China, be they SME or medium businesses or large businesses. And we want to make sure that the Standard Bank Group, which is represented as Stanbic Bank Ghana, in collaboration with the biggest bank in the world, Industrial and Commercial Bank of China, ICBC, we're able to use this collaboration to make it easy for our customers to do business with China in a manner that will sustain their business and help them grow.
Why China? There's got to be something you're seeing that we are not.
No, I mean, China is the second largest economy in the world, and they're on a growth trajectory that will certainly make them the biggest economy in the next decade, possibly. And their relationship with Africa has increased tremendously in the last decade. In fact, China has what Africa wants. Most African countries are net importers, and there's huge need for growth, not just on infrastructure and investment, but to spur growth at the level of SMEs and small and medium businesses. So we can see this happening. The businesses are actually already doing it. Lots and lots of Ghana clients go to China all the time to import goods. And all we are doing as a bank is to connect them into our network in China.
Yeah, and right. This is coming at a time where there have been concerns raised about China's interest in Africa. People concerned that China may be exploiting Africa. Because you say Africa has what China needs. What do you say to people like that?
I will tell them that that's probably not the correct information. I don't believe, given what China has done in Africa so far, that there's any intention of colonization in it. We know the history of Africa and where we've come from. And if you look at the investments and infrastructure development that China has been involved in Africa, none of those lacks government support. So if the citizenry are not happy about any of those investment and collaboration with China, we should be blaming our government, not China. However, from our interaction and engagement with China at a strategic level, we know that China has good intention. Just recently, they have not only made sure that they are supporting African government at various levels, they've also opened their market for Africans to export to China. Likewise, the rest of the world. But this is a brilliant opportunity now for Africa to export finished goods to China, not just raw materials.
And for instance, the U.S. has warned African countries against China. And I'm going to come to this part of it because we know currently that the U.S. and China are in a trade battle. And we know that it has economic implications for both countries, some suggesting that China may be on the losing end. And we are introducing this around the same time. I just want to pick your thoughts about the trade war going on right now. Who is going to be the winner, who is losing, really, and the global impact?
You know the saying that when two elephants fight, the grass suffers. Chances are Africa as a whole and the smaller countries will end up being at the receiving end of the fallout from the China and U.S. Trade war. It's not easy now to say who is going to win or who is going to lose, but often from history, when you have this kind of trade war, it often results in a lose-lose situation. The question is, because Africa is such at a juncture where global events impact Africa, whether positively or negatively, one thing that we know for certain that will come out of this is China will have to look elsewhere for trading partners, and Africa will be one of those.
Okay, final one in 15 seconds, if you can. So what's in it for African importers, again, if they sign on to this?
African importers will have opportunity now to increase their negotiation power through the network that we have connected them into. They will have opportunity to get much better price, much better conditions of payment, and guaranteed quality of goods that they paid for. And that's what we have brought to them. We have tested it, it works, and we are now inviting them to leverage this opportunity.
Thanks for your time tonight. That was Head of Africa-China Integration at Standard Bank, Dr. Manasseh Alagwoso. Thanks very much for your time.
My pleasure.
On Business Live tonight, let's move on. Managing Director of Tullow Oil Ghana, Kwaku Awokyere, has been promoted to an Executive Vice President to the position of Executive Vice President. Now, this follows the reorganization of the group structure. The move would mean that Tullow Ghana, which was part of the West African business, now reports directly to Group Chief Executive Paul McDad. Mr. Awokyere has been giving us more details about this promotion and what it means for him.
It's a reflection of the journey the company's been on. 10 years ago, there was no oil and gas capacity in country. We built that up over the last 10, 11 years. And we're at a place where the company feels that the company can be run by Ghanaians. I happen to be here.
Does it give more meaning to this whole local content? Or again, it's about, and sorry if I'm personalizing this, what the man brings to the table?
It's probably a combination of both. I mean, yes, I do have a lot of experience from other industries, energy, power, mining, so that's hopefully helpful. At the end of the day, I mean, organizations don't bring in people who they don't expect to perform. But it's also very much a reflection of the journey the company's been on. And I think, as I said to a previous interviewer, that Tullow has always had a commitment to localize, to bring in Ghanaians, and that's been across the board. You see on the leadership team, 5 of the 8 leaders are Ghanaians. So it's very much a reflection of that commitment.
Will it make it more easier for you in taking those strategic decisions?
What would make it?
In fast tracking the turnaround time for some of these strategic decisions that you have to take now that you are more closer to the group CEO?
I think what it means is that Ghana has more of a say at the top table. I mean, so if you recall, Tullow has business across the globe. It has business mostly in Africa, sure, and has a big commitment in East Africa as well, and different parts of West Africa, and also looking in South America. But I think the commitment or the desire of the executive is that, they shouldn't have to talk to 2 other people before they hear from Ghana. They should hear from Ghana directly. So,
in a related development, Tullow Oil says it is optimistic of being selected as winners of the new oil blocks being auctioned. Tullow Oil and 2 other operators, ENI and Vitol, have put in their bids for these new blocks at the close of May 21, the submission date that is. Paul McDade is Group Chief Executive of Tullow Oil.
It's such a core business, and we've shown our commitment to Ghana as a country. I'd like to think we're a good partner to the country, and our staff here have worked so hard to develop Jubilee and then 10, and they're working hard to extract those resources. What we want to see is a new leg of growth for our staff here, for our organisation, and also to take much of the knowledge and experience we have here in Ghana and apply it to the new licences that are available in the round.
I asked earlier on, but I was just trying to reiterate the point again that, I mean, yes, of course, that's the standard practice and in regions that you operated, but would you have wished that there would have been a more of a direct negotiations with government with respect to this oil field than this whole boutique contest?
There's certain situations where direct negotiation is the right way to go, and there's certain situations where the competitive process is the way to go. I think the government decided in this case we have some licences and we're going to go down a competitive process. And I say we're very comfortable. We've put in a strong bid. We understand the area, we understand the country. As you know, we have a very strong team here. So what we've been able to do on a competitive basis is go in there, put in an aggressive bid for investment in a new block with very early drilling. So we think that that will be competitive. But
Ghana Oil Company Limited, GOIL, has declared a dividend of 0.042 Ghana cedis per share, equivalent total payments of over 16 million Ghana cedis for the year ended 2018. The dividend of 4 pesos per share is a 50% appreciation from last year's dividend of 2 pesos per share. Board chairman of the company, Kwamna Batel, said the increase in dividend payments was as a result of a 20% growth in the company's profits after tax. He was speaking at the 50th annual general meeting of the company, and we'll bring you that subsequently here on Business Live. You're watching Business Live. We're taking a short break. We've got plenty more news after that. Stay with us. Welcome back to Business Live. We're on the issues to do with GOIL. Well, Ghana Oil Company Limited has rebranded to GOIL Company Limited. The decision was confirmed following a unanimous vote of agreement from the shareholders at the company's 50th annual general meeting. Speaking to Joy Business, the CEO of the company, Patrick Okoli, said the rebranding was in response to demands of stakeholders.
The Ghana Oil Company Limited has been known as GOIL since its inception in 1960. However, shareholders of the company have voted for a name change from Ghana Oil Company Limited to GOIL Company Limited in accordance with Section 15 of the Companies Act 1963 Act 179. CEO of the company, Patrick Okoli, explains the rationale behind the rebranding.
Ghana Oil Company Limited. It's more or less a sentence. GOIL. What is it? The children, everybody, the rhymes, everybody already knows the company as GOIL. So all that we are saying that this is what the people want. They want to call the thing GOIL. So why don't you give it to them? We are responding to market research. We are responding to the desire of the shareholders. We are responding to changes in the industry. That instead of making a sentence, Ghana Oil Company Limited, and sometimes people even think that we are JMPC. So why don't you come out with our brand? We have a new brand to stand up. So GOIL, good energy, simple.
Mr. Okoli was speaking at the company's 50th annual general meeting, which saw the company increase its dividend by 50% to 4 pesos per share from last year's dividend of 2 pesos per share. It translates into a total amount of over 16 million Ghana cedis. Patrick Okoli also commented on this feat.
We decided to increase the dividends by 50% because if you look at the trend, the stock market is not doing well because people are moving money from the stock market to other money market areas. So what do? You try to increase the appetite of the shareholders, by increasing the dividends. If you increase it, then people will know that, yes, at least they have some payouts, so they will not be too much in a hurry to go and sell their shares. So that is why we have increased it.
Meanwhile, the CEO of GOIL, Patrick Okoli, is set to retire in November and take over as the board chair of the company's subsidiary, Go Energy.
In another development, GOIL says its association with international oil company ExxonMobil as a local partner for the exploration of the deepwater Cape 3 Points block will come with a $25 million investment for a period of 5 years. Exxon selected GOIL as its local partner in compliance with Ghana's exploration and production law and has since received approval.
The 5% equity with ExxonMobil, the local content law for petroleum upstream, it says that the oil explorers must scout for a local partner. ExxonMobil came, they did their due diligence, and they found out that GOIL was capable of partnering them to fulfill that local content law. So we agreed. Luckily, His Excellency the President agreed. Parliament has approved. All that entails is that we are also bearing, because equity is a risk-bearing funding. So we are holding ourselves to 5% of any risk. And then we did all the analysis, and we think that for the next 5 years, the maximum exposure to GOIL will be what? 25 million USD. Assuming oil is not found, that is likely money to be lost. And we look at the balance sheet, ExxonMobil look at the balance sheet, and they thought that we are capable of carrying that risk. But we are assuring the shareholders that there is a very, very great chance. Oil exploration is always a risky business, but there is a good chance of ExxonMobil striking oil in Ghana.